Let's take a look at your market news now. Asian markets closed lower as overnight developments on Brexit meant the deadline for the United Kingdom to leave the European Union would likely be delayed again. Among mainland Chinese stocks, the Shanghai Composite was down 0.43%, while the Shenzhen Composite lost 0.79%. Hong Kong's Hang Seng Index tumbled a 0.84% in afternoon trade. Meanwhile, the International Monetary Fund released new projections that showed growth in Asian economies could be slower than expected. It said growth in Asia could moderate to 5% in 2019 and 5.1% in 2020. Over in the US, markets had a good run for much of yesterday on upbeat earnings reports and lessening fears on the US-China trade tensions. But sentiment was disturbed towards the end of the trading day on news that Facebook faced an expanded New York-led probe. The Dow Jones Industrial Average ended the day down 0.15% at 26,788 points. The S&P 500 declined 0.35% to 2,996, while the tech-heavy Nasdaq got hit harder on the back of that Facebook probe, falling 0.7% to 8,104 points. Let's get some more on the markets now. We cross to Nastasia Arends, who is standing by the Johannesburg Stock Exchange. A very good afternoon to you, Nastasia. Over to you.
Good afternoon, Singer. We've seen Asian markets a little bit lower as the Brexit developments took a hold of risk sentiment on that side. Asian currencies weaker against the dollar but stronger against the pound. We've seen the pound fluctuate as EU leaders decide whether they should actually extend the Brexit delay. Talks are that it might actually get extended to January 31st. Locally, we've seen the JSE move in line with what we're seeing on the Asian front. We've had some company news Quilter saying that their assets under management up 9%. However, that stock was lower. And we also saw half-year numbers out of Cartrack. This is the company that offers fleet management services as well as stolen vehicle recovery services. They're saying that, they are in line with the 7 year of consecutive double-digit growth. Their subscription numbers now accounting for almost 96% of group revenue. But let's have a look at the global markets picture to see how some of these news are playing out. Well, to talk about the markets more in-depthly, I'm joined in studio by Michael Traherne from Vestec Asset Management. Michael, thank you so much for your time. So it feels as though we never stopped talking about Brexit. I mean, the first few months of the year, it was basically a toss-up between Brexit and the US-China trade negotiations. That seems to be moving, I suppose, in line with the optimism around both leaders. Now the focus shifts to Brexit. Your thoughts on that?
Yeah, we're now 3 and a bit years into this debacle, and it doesn't really look like it's coming to an end. UK lawmakers saying yes, they support Prime Minister Johnson's current plan, but they don't agree with his timetable. More than likely, we're probably going to see an extension until next year, give parties more time to debate, maybe attach a second referendum onto this deal before they vote it through. And then, of course, once the UK Parliament has agreed to it, then the EU Parliament also has to do it. But the assumption is that will just be rubber stamped. Most of the leaders all move in the same direction there.
Staying with things in the UK, we had the announcement from Naspers or Prosus saying that they're looking to make a play for Just Eat. Is it one of those cases where we really now believe that Naspers is really focused on this food delivery side of the business? But also, does it make you a little bit nervous given some of the history we've seen with some of our South African companies making a play into the UK market, the likes of Famous Brands and Truworths, etc.?
Yeah, so Naspers already owns Delivery Hero, which is listed in Frankfurt. They in 41 companies around Europe, so it's not like they're not part of the European food delivery market. They're now trying to go for Just Eat, which is UK based, and most of the countries that Just Eat operates in doesn't overlap with Delivery Hero. So it's quite a good play, a bit of synergy bringing it together. They bid, what was it, I think about £5 billion for it. To put that in perspective, that's worth more than the value of ShopRite at the moment. And this deal didn't even move the Naspers share price yesterday, so it just shows you how big and how valuable the 10-cent asset is, and how everything else in their stable is a little insignificant at the moment.
It would be remiss of me if we didn't talk about WeWork and what's happening there, especially with SoftBank, increasing their stake to 80%.
Yeah, so what a wild ride. Who says that investing is boring? The price, or the effective price, went up all the way to people were speculating to be worth between 40 and 60 billion. They tried to take it to market, and the market said, no way, we're not paying 60 billion for that. We don't even know if we want to pay 40 billion for that. And the result was that the company effectively ran out of money and had to then restructure. It's now worth only 9 billion, and their biggest shareholder had to put in more money to keep the doors open. There will be a few retrenchments, but their founder walks away with $1 billion. So look, I suppose he has created something exciting, but I'm not sure. You walk around Rosebank where our offices are, and there's many office sharing options around the area. It's not like office sharing is this revolutionary idea. It's not like Uber, where once you're in the app, you're stuck in the ecosystem. If you don't like WeWork's office sharing offering, you just walk across the road to the competitor, and it's very similar price, similar offering.
All right. Are there lessons to be learned here? I mean, some may say, well, capitalism is a really bad thing because, a lot of the employees are going to be let go of, and you have Newman who walks away a billionaire. And some may say that maybe there are lessons around valuation and how we value office sharing startups. From your perspective?
I would think about the employees that get to keep their jobs. If it wasn't for Newman, they wouldn't have jobs in the first place. Unfortunately, in the US labor laws, or maybe fortunately in the US, labor laws are very weak. It's worth pointing out that their unemployment rate is 3.5%. Many key positions in the US can't actually find people to fill those positions. So the people who are let go in the US more than likely will be able to find other jobs very quickly. Obviously, it's a different story in a place like South Africa, but there's no job losses here, so we're okay. I think in general, you want to encourage entrepreneurs to try new, bold ideas. Investors need to be wary, though. I think the big thing is, does your business have a moat? In sense, are they different? What differentiates them? And WeWork didn't really have a moat, and I think that's their problem.
We had CPI numbers coming in at around 4.1%. Does that then open the door for the Reserve Bank to perhaps cut rates?
I don't know if they're going to do it. We'll have to see what happens in October. Oh, this is October. In November, the next CPI number comes out while they're meeting. If that again is low, particularly if it's below 4%, very much opens the door, I'd say, to a rate cut. The key at the moment is what is happening with oil prices, what is happening with the rand. Probably more what's happening with the rand. If the rand stays in the 14 range, and political turmoil seems to have calmed down, then very much so I think the Reserve Bank has a good reason for cutting rates. What also happens with rain. Previous CPI reads, your lack of rain and increase in farm produce prices was one of the drivers. In this current CPI read, food was on the downside. I must say wine, though, was up 10%. So don't drink wine, drink beer this festive season, I think is what CPI is telling you. And it's quite cool to see telecommunication equipment down 7%, and that's a trend that keeps going. So cell phones getting cheaper, more people with access to data, more people with access to internet. That's a brilliant thing.
Michael, let's leave it there. Thank you so much for your time. That is Michael Traherne from Vestec Asset Management. Stay tuned. After the break, Nompumelelo Siziba and Nzinga Gunta will be back with more of your news.